Hey everyone, welcome back to Corporate Decoder. Today we are diving into Comtech Telecommunications' latest report, and let me tell you, buckle up because this one is like a roller coaster where the breaks are a suggestion, not a guarantee. You'll see what I mean very soon as we discuss the financial tables. The main takeaway, Comtech is struggling, showing losses and raising concerns about whether it can even continue operating as a company. There's a lot going on, from leadership changes to debt issues, so let's break it down in plain English. This is Comtech's 10Q report, which is like a quarterly checkup on the company, showing how they performed financially in the last 3 months ending in January. It starts out normal enough, listing the basics of the company, where they are located and all the formal stuff. Here is what to be aware of. There were about 29.3 million shares outstanding. That's how many pieces the company is divided into for ownership. Looking at the index of what is in the report, we'll skip to the fun part, financials, and see how they are doing. Here's where we see what Comtech owns and owes. Let's check the assets. Their cash dropped from $32.4 million to $26.7 million. Not a huge drop, but not a great sign. Accounts receivable. This is money owed to Comtech. It went down from $19,667 and $267 in 2 year. This means they are receiving payments. Total assets, which is the value of everything they own, is at $770.6 million, which is a big decrease from July when it was at $912.44 million. Let's check the other side, what Comtech owes. Current liabilities, which are debts due within a year, jump from $183.5 million to $385.3 million. That's more than double. This could give anyone a financial heartburn. Total liabilities is at $519.5 million, down from $426.1 million. The big change here being the current liabilities, which is never a great sign. Less assets and more current debt is never good. The total of what they owe plus what's left for the owners is at $760, 6 number I mentioned earlier, as it always should. Now let's move on to the income statement, which shows how much money they are bringing in and spending during the last few months. Net sales. This is Comtech's total revenue, $126.6 million compared to $134.2 million last year. That's a small decrease, but still not what you want to see. Gross profit is at $33.7 million from $43.2 million a year ago, which is what is left after subtracting the cost of making the sales. Here's where things look worrying. Here we see what really hurt them, impairment of long-lived assets. This is an accounting term that means their stuff isn't worth as much anymore. It was zero last year and is now close to 80 million. Yikes. Net loss is at negative $48.7 million, and a year ago it was negative $10.6 million. They are losing more money now than they were before. Net loss per share, if you owned one piece of Comtech, you'd effectively lose 0.76 cents. It was negative $1.07 a year ago. If we look at 6-month numbers, we see pretty much the same, so we are good to skip to our next financial statement. This statement shows the movement of cash, where it came from and where it went. Net loss is negative $197.1 million from last year at negative $12 million, so that is not great for the starting number. The big driver at $79.6 million, just like previously. This is where the rubber meets the road. Net cash used in operating activities. Comtech burned through $22 million. Last year they burned $41.2 million. This number needs to be positive for a company to survive. They received $20.3 million from financing, borrowing and selling stock, which isn't sustainable in the long term. Cash and equivalents at the end of the period, a decrease of $6 million if this burn continues. They won't have cash for long, and there you have it. Pretty much all financial statements point to it not going well for Comtech. The notes section of the report confirms our fears. Here's the key part. The report admits there is substantial doubt about Comtech's ability to continue as a going concern, which means there's a real risk they might not be able to stay in business. One of their big problems is debt, with all those convertible preferred stocks, where interest rates can swing like a roller coaster gone mad if they cannot keep up, further compounding the issues. Restructuring expenses, which are costs from reorganizing the company, such as layoffs and factory closures, can impact how profitable they seem to be. They amended their debt agreements to avoid defaults and received more credit, which means they are having even more trouble with their obligations. The obligations for the credit facility are guaranteed, so that adds pressure on them. Numbers tell their own story. The net sales decreased, large impairment loss, the losses are up. There are collection risks, inventory write-downs, negative cash flows from operations. The report says Comtech has plans to try to improve things, new investment, better sales contracts, cutting costs even more, maybe selling off parts of the business or issuing more stocks and debt. But even the company admits these plans have risks. So what's the verdict? Comtech is at a crossroads and not a good one. Here is my take. So Comtech's current direction is very rocky. Their strength lies in their technology, but they are weakened by their high debt and inability to generate profits. Key risks include failing to meet debt obligations and economic conditions reducing their market. And opportunities may be restructuring can save them some new high-margin contracts. Government might always need what they are selling. Here is my simple conclusion. Comtech is in trouble, and it's hard to see a clear path to recovery. They need a miracle to turn things around, and quick. And that's a wrap on this corporate decoder. If you found this breakdown insightful, hit that like button, drop a comment below, and subscribe for more deep dives into the world of corporate finance. See you next time.